Once again, a flat performance coming through on the JSE. Yesterday we were up 1.25%. We were optimistic yesterday that things could be reviewed in a different manner in the US and Europe, and now again we're worried about what could the Fed could come up with, and of course the news flow from Europe. What is your sense right now? Do you think that we are sitting with a very undecided market?
Definitely. I think the market is sort of precariously positioned at the moment. Our view is that there's still downside from current levels. The South African market was up most of the day, ended flat. But bear in mind that the rand moved out quite aggressively today, so the rand hedges actually benefited. Without that kicker to the rand hedges, I think we would have been down significantly more.
Well, let's just look at the cyclical rotation that could possibly be imminent and perhaps has already started into the rand hedges. Do you think that this is a sustainable move, would you say, Johnny, or do you think that we could see this reversed as the rand starts gaining momentum? We are of the view that the rand could actually get weaker as we go along, but of course this is just again a forecast.
Look, our view has been sort of positioned for a weaker rand most of the year, and in fact the rand had been flat for most of the year till about sort of July-ish, and we've seen some weakening since then. Yeah, you definitely saw some kind of sector rotation in the market today. Some of the retail has been a bit weak, and some of the sort of platinum and gold stocks are gaining quite nicely.
Let's also touch on some of the food stocks. Woolies coming under significant pressure today. Quite surprising, given the fact that we saw retail sales numbers coming in far higher than most had expected. We saw a 2.8% year-on-year number for July. Consensus was around 1.3%. That surely should have given Woolies and all the other food and clothing retailers a boost, but to the contrary, we actually saw a bit of pressure today.
Correct. I mean, look, Woolies has been a sort of a star performer. I think the last week hitting sort of new 52-week highs. It's been a sort of a rip-roaring ascent. So I wouldn't be surprised if people are taking some money off the table. Retail sales still positive, but not the kind of retail sales we had sort of back in the boom, which was sort of running 8% double-digit growth at certain times.
Let's touch on SAB Miller, and this has really been the talk of today's session. Of course, the deal with Foster's concluded. 11.5 billion Australian dollars is what the overall deal is worth. Do you think that it's going to be taken up positively by the market? Because a bit of a disconnect with regards to the SAB's performance in South Africa relative to the UK performance.
Correct. It was up for most of the day quite strongly in South Africa, but actually was down in the UK. Our general view is that it's a slight break from SAB's traditional sort of acquisition strategy of moving into emerging markets, where you'd have an increase in sort of wealth of the consumer, and as they became wealthier, they would drink more beer, and you could also migrate them to more premium brands. In Australia, in our view, you have a very mature market, and they're not going to have those tailwinds of a richer consumer and being able to sort of upsell them. Added to that, you've got the Australian dollar at sort of multi-year highs, so you're going into Australia at quite expensive sort of currency rates as well.
Do you hold SAB at this point? What would you be doing with your holding right now if you did hold SAB, Johnny?
Well, look, we don't own SAB. I mean, with perfect hindsight, you would have probably held both SAB and BTI in the last 2 years. We've had most of our sort of expensive defensive exposure in BTI. But generally, I think SAB looks pretty full up here, sort of 15.5 times forward earnings, probably in line with its longer-term average, but it's looking quite expensive relative to some of the other global brewers, Heineken and Anheuser-Busch. So not much left in SAB. In rand terms, you might get a kick if the rand continues to move out.
Remgro, I know that you do hold Remgro. In fact, a flat performance today, late yesterday out with results, a strong performance, of course, 15-month earnings that we saw coming through, and also a deal with Grindrod. What is your sense with regards to Remgro? Are they on the right footing?
Yeah, I guess we would have liked or expected a higher dividend out of Remgro, but it does look like they're looking to deploy that, as you mentioned, into Grindrod. Which I think long-term is probably a good strategic move. They have tried to get into infrastructure for some time. You may recall a couple of years back helped Kakiso fund an infrastructure fund, and they've been trying to get into that space for some time. So Grindrod seems like the sort of perfect avenue. 15 Rand is probably fair value for Grindrod at these levels. But we still feel that Remgro still sits on quite a lot of cash. They announced that they had sold Tracker, so that will give them another about 1.2 billion all the special dividends coming from RMH and RMI and First Rand. And hopefully there'll be some distribution down the line for shareholders.
Johnny, you alluded to it a little earlier today, looking at the gold stocks. I mean, the likes of Harmony, again, above 100 Rand a share. Do you think we're seeing a mini bubble occurring within the local gold miners, or would you say they're just starting to re-rate, given the fact that the local currency has started to weaken?
Yeah, I mean, the gold stocks in South Africa, Anglo Gold, Goldfields, Harmony, they have lagged the gold price tremendously in the last sort of 18 months. So really, if you look at a graph of gold miners versus the gold price, they've lagged considerably. This is really just some kind of catch-up, and obviously the weaker rand is going to help them quite a lot. So I don't think the gold miners are in a bubble phase at this point.